Hey everyone, welcome back to the channel. Today, we're diving into an in-depth technical analysis of NVIDIA. We'll be looking at the daily chart and discussing some critical patterns that have formed recently, including a potential double top. So, let's get started. As we look at the daily chart of NVIDIA, we can see that the stock recently closed at $117.93. This marks a significant move down from its previous close of $121.09. The volume for the day was quite high at 213, 349, and 136, indicating institutional trading activity. Speaking of trading activity, tap the Patreon link below to get a 7-day free trial to our insane options trades with an average win ratio of 91% and over 2,500% in cumulative gains each month. Try us for free and see and learn how pros trade the options market. One of the key patterns we're seeing on the chart is a double top formation, which typically signals a bearish reversal. This pattern formed with peaks around $140.76 and $136.15, and the neckline is drawn at approximately $118. On Friday, NVIDIA closed below this neckline, confirming the double top pattern. The double top pattern suggests that we could see a measured move down to around the $102.50 level. This target is derived by measuring the distance from the peak to the neckline and projecting it downward from the neckline. NVIDIA stock did manage to close above the 50-day moving average, but it really hasn't retested that level currently at 116.50. I will be watching for a decisive break and close below that key level next week, which could increases the selling pressure. The point and figure chart shows a rather compelling breakdown that triggered on July 12th and has been selling off ever since with an algorithmic price objective of $99. Ouch. I personally am not selling my NVIDIA shares, but plan on hedging my NVDA stock with strategic stock options. Remember, investors can get alerts on my options for free when we make a move each day by signing up to my Patreon below. I've been trading options professionally for over a decade, and I'm happy to share the secret to my wealth. Additionally, there's an open gap between the 95 level and 102 levels to fill, and I suspect that could come into play if momentum continues to shift to the downside. With Friday's confirmation of the double top, by closing below the neckline that could increase the selling pressure in the days and weeks ahead. This double top formation may have been caused by recent announcements of new AI chips by major companies like Google and Intel have introduced concerns about intensified competition. Although NVIDIA remains a dominant player, these developments can trigger investor anxiety about the company's future market share. NVIDIA's stock has been subject to fluctuations, and some of this sell-off can be considered a natural correction or a refreshing pause after significant rises. This pattern isn't unusual for the stock, which has seen similar declines followed by recoveries in the past. Some investors might be reassessing the valuation of NVIDIA, especially given the rapid gains in the past, leading to profit-taking and reduced positions. Overall, while there are concerns contributing to the sell-off, many analysts remain bullish on NVIDIA's long-term prospects, particularly due to its strong position in the AI and GPU markets, expected to drive future growth. NVIDIA, like many tech stocks, is significantly influenced by broader market trends, especially those affecting major indices like the NASDAQ 100. The NASDAQ 100 includes many of the largest tech companies, and its performance can reflect investor sentiment towards the tech sector as a whole. When the NASDAQ 100 is stable or performing well, it generally indicates a positive environment for investment in tech stocks, providing the confidence that can lead to rebounds in individual stock prices like NVIDIA's. Let's look at some important moving averages. Currently, the stock is trading below its 10-day, 20-day, and 50-day moving averages, indicating a bearish trend. The next significant support level to watch is the 200-day moving average at $77.14. However, before we get there, we should keep an eye on intermediate support around the $102.50 level, which is the target from the double top pattern. And let's not forget, NVIDIA likes to fill the gaps. And to do that, price needs to drop all the way down to the 94-ish level. With the current price sitting near the lower Bollinger Band, there's a potential for a bounce, but the overall trend remains bearish. The RSI 5, Relative Strength Index, is currently at 30.32, the RSI 14 is at 44.28 and approaching the oversold territory. This could indicate a potential short-term rebound, but it's crucial to watch if the RSI crosses below 30, which could signal further downside. Momentum traders will increase their long exposure on a crossback above 30 on the RSI 14. The volume profile shows significant activity around the current price levels, suggesting strong market interest and potential support around the $116.56 mark, the low of the day. The chandelier exit, which is a volatility-based indicator, is currently at $124.90. This level would act as a trailing stop for any short positions. In conclusion, NVIDIA is currently in a bearish phase with a confirmed double-top pattern. The measured move suggests a potential target around $102.50. Traders should buy the 105 put options not expiring for at least 2 or 3 months out. Traders in our group will have the advantage of buying the exact puts we get, price paid, and our targets all in real time to get our lucrative options trades. In real time, I'll drop a link to our Patreon below where you can get a 7-day free trial for those of you that like to make lots of money. If you found this analysis helpful, make sure to hit the like button and subscribe to the channel for more stock market updates and technical analysis. Don't forget to leave your comments and let me know your thoughts on NVIDIA and any other stocks you want me to analyze. Thanks for watching and see you in the next video.